Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news we can't escape the G20 meeting circus and the conflicting reports around the Xi-Trump negotiations. But first up, it is a reverse story today. Bitcoin has dived from its giddy height, at one stage reaching $13,879. Right now, it's at $10,752 and a dive of $3,000 or more. That's 23% down in just 24 hours. Easy come and easy go in the most speculative market going these days. In the US, pending home sales bounced back somewhat in May, pretty much as expected, with more than a 1% rise since April, and they're now but they're almost 1% lower than in May 2018. We got another regional Fed factory survey out overnight, and that continued the trend of reporting a stall in growth. This condition is spreading widely now. Not helping is that Boeing is being hamstrung by its giant 737 program, and that American car sales are weak. And the final US March quarter GDP result was updated last night, only marginally lower than previously signalled at 3.1% growth, which is strong. However, there's a little sting in these final numbers, with personal consumption component recording just a 0.9% growth and far below the interim 1.3 that was estimated. Also on the slide is European business sentiment. Not helping there will be that carmaker Ford has said it will cut about 12,000 jobs across its European operations by the end of 2020. They need to cut costs and restructure its European business, which is losing money. All eyes are now on the G20 summit and the important Trump-Xi meeting. But the US president is now lashing out at everyone, including allies, and that is having some interesting effects. One is that China and Japan are drawing closer. By keeping markets interested in the China-US relationship are reports that the US is pulling back on the threat of heavy new tariffs. Yesterday, Asian equity markets ended with good gains. Shanghai was up 0.7%, Tokyo was up 1.2%, and Hong Kong was up a heady 1.4%. Europe didn't follow, however, drifting lower everywhere except Frankfurt, which posted a modest gain. On Wall Street so far, the S&P 500 is following Shanghai, up 0.5% in late trade. The US Treasury 10-year yield is slipping today, now at 2.01% and down 4 basis points. Gold is lower today, down by $5 to $1,406 an ounce. And US oil prices are marginally lower as well. They're now at just over $59 a barrel, while the Brent benchmark is on $66 a barrel. And the Kiwi dollar is still rising, and it's rising across the board, now at 67 US cents. On the cross rates were firm at 95.7 Aussie cents, and against the euro we're up to 58.9 euro cents. That pushes the TWI up to 71.5 and a new 3-month high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.